Welcome back to the CryptoBot channel, everyone. My name is Josh, and right now the Bitcoin price is forming a massive fractal on this brand new Bitcoin chart. So I'll be talking about that in just a moment alongside the Ethereum chart and also the stock market later in the video. Definitely stick around. First of all, starting off on the 4-hour Bitcoin chart, just to let you know that we still have some short-term support at around 28.6k, and we also have this level of resistance coming into play at around 30.7k approximately. So as I mentioned yesterday, those are still the important points of support and resistance in the shorter term that I am paying attention to for Bitcoin. And obviously over the past one day, not a lot has happened for Bitcoin and Ethereum, which is why I'm just making the one video with all of the information in one video, rather than splitting it into two videos and just wasting your time. But what we also need to keep an eye out for is this pattern right here, which is technically a descending triangle pattern on the 3-hour Bitcoin chart. And technically speaking, this pattern is more of a bearish pattern than a bullish pattern, because roughly around 7 times out of 10, this type of pattern breaks to the downside, and about 3 times out of 10, it breaks to the upside. And even the structure of the pattern itself tells us some bearish signals. For example, the fact that we're potentially seeing a descending line of resistance shows that the selling pressure is slowly increasing, while the buying pressure is remaining stagnant because we're seeing horizontal lows over the past 1 to 2 weeks. But considering the overall lack of momentum, especially over the past 1 week, if the Bitcoin price simply comes back up towards this line of resistance that I just talked about, then in that case, this descending triangle pattern wouldn't really mean too much, because we would most likely remain in some sort of sideways consolidation range in between this line of support and resistance. But if we see a confirmed break below around 28,500, which is also the support line for this descending triangle pattern, then in that case, the technical price target to the downside would be coming in at around 25 to 26,000. But obviously, as of right now, at least at the time of recording this video, we have not seen a confirmed break below this support line, at least just yet, which means that 25 to 26k price target is not in play, at least as of right now. And just giving you a quick update on the daily Bitcoin chart, obviously we still have this active bullish divergence, which is why we're seeing a lot of reduced bearish momentum after that massive bearish move that we saw a few weeks ago. But if you've been keeping up to date with my videos over the past few weeks, you would already know about this. In fact, right after that crash, after we hit the price target down towards 25k, I was mentioning over the next couple days how we're most likely about to see a lot of sideways choppy price action, and obviously that's pretty much exactly what we've seen over the past 1 to 2 weeks. And so considering the fact that this bullish divergence is still active on the daily chart and this bullish divergence is still active on the 2-day Bitcoin chart, that is still mostly what I'm expecting in the shorter term, talking about the next few days, maybe the next 1 to 2 weeks, just simply more sideways choppy price action, relatively speaking, unless we see another signal, in which I'll be sure to keep you updated if anything changes. And if you zoom out to the weekly Bitcoin chart, and in fact, this right here is not just the weekly Bitcoin chart, this is actually Bitcoin valued against the Nasdaq 100 index. So essentially, this chart shows us how Bitcoin is performing versus the Nasdaq 100 index, so basically the tech stocks. So when Bitcoin is pumping on this chart, that means Bitcoin is outperforming the Nasdaq 100 index, but if Bitcoin is dumping on this chart, that means Bitcoin is underperforming against the Nasdaq 100 index. And obviously, this chart looks very similar to the normal Bitcoin to US dollar chart, but there are some important differences. For example, if you're looking at the 2 highs that we've set over the past 1 year approximately, we actually saw a lower high when you value Bitcoin against the Nasdaq 100 index. Whereas if you look at the Bitcoin to US dollar chart, we actually saw a higher high, a slight higher high back in November last year. And also on the Bitcoin to US dollar chart, we have already broken below the low that we set during the middle of last year at around 30k. Obviously, we dropped down towards around 25k. But when you value Bitcoin against the Nasdaq 100 index, we have not broken below that previous low, at least just yet. Currently, we're still looking at higher lows on this chart. So what this does is reveal a massive fractal that is happening right now to what we saw during 2018, 2019, and 2020. Obviously, back in 2017, we saw a massive bull market, and then we went into a bear market in 2018. And then at that stage, we started forming a higher low structure. And then after the Bitcoin price bounced around at this lower price range for a few months, we saw an explosion in the Bitcoin price all the way back up, but we did not make it all the way back up to this previous high. So we obviously started a lower high structure. And then we experienced quite a bearish time in crypto, especially during the March 2020 crash. That was a severe crash for pretty much all markets. And during that time, there was a lot of fear in the markets. Obviously, we all know what happened in early 2020. Pretty much the entire world economy shut down. And that actually started a recession in multiple countries around the world, even though it was short-lived. But basically, everything in the world at that stage, especially in financial markets, looked absolutely horrible at that stage right there. And usually when that's the case, when things look horrible, when everyone's fearful of more bearish price action, that's usually a pretty good time to pick up some cheap assets like Bitcoin, for example. And obviously that turned out to be true later in the year. Now, obviously, there is different things happening in the world right now compared to back then, but the levels of fear and the levels of panic at the moment are quite similar to what we saw in early 2020. And yes, it's possible that this fractal might not even play out, but it is something important to at least keep in mind during a time in the market where almost everyone expects things to get a lot worse. But even if this fractal does play out, we still have a lot of work to do. First of all, we obviously have to bounce back up towards this line of resistance, and then we need to see a confirmed breakout before we can expect any significant bullish price action like this again. And now getting into the Ethereum part of this video, this right here is the daily Ethereum chart, and obviously we still have this active bullish divergence. So as you probably already know by now, I am still expecting more sideways choppy price action in the shorter term, speaking about the next few days or so for Ethereum. And looking at that short-term neutral price range that Ethereum is sitting in right now, we have an important line of support coming into play at just above 1900 at around 1910, and we have two key levels of resistance that I am paying attention to, which are coming in at around 2060 and around 2150. And what's interesting about those two levels of resistance right there is they're not only based on previous price action where we've previously found rejections, they're also based on Fibonacci levels. For example, if you bring out the Fibonacci retracement tool from this high down to this swing low, we have a golden pocket sitting at around 2060 to 2070. And then if you zoom out a bit further, bringing out the Fibonacci retracement tool from this high up here at around 2450 down to the swing low at around 1700, we also have a golden pocket, which is sitting at around 2150 approximately. And while we're on the 4-hour Ethereum chart, we have another symmetrical triangle pattern that is technically forming right now. Obviously, we have a descending line of resistance, which was previous support that then flipped into new resistance. And we have an ascending line of support showing higher lows in the price of Ethereum. So this type of pattern by itself isn't necessarily bullish or bearish, it's more of a neutral pattern. But technically, we can take into consideration the trend that Ethereum entered into this pattern, which was obviously a downtrend entering into this pattern, which means it could be slightly more likely that Ethereum breaks to the downside rather than to the upside, because this can act as a trend continuation pattern. But ideally, we just need to wait for a confirmed break below support or above resistance. And right now, this line of support is coming into play at around 1930, and this line of resistance is coming into play at around 2060. And heading over to the Ethereum versus Bitcoin chart on the 3-day time frame, this is not looking too good. Obviously, I said that yesterday, because what we have seen recently on this chart is a break to the downside, and then we saw a very small retest of this previous line of support, which is now acting as new resistance because we saw a rejection from that line. And over the past 1 day, we've just seen a 3-day candle close, which confirmed the last 3-daily candle in the red, which basically cemented that rejection in place. So the last confirmation signal that I am looking out for on this chart to further confirm this break to the downside is a break below this previous low sitting at around 0.064 Bitcoin per Ethereum. And there's a couple reasons as to why I want to wait for that confirmation of the break below the previous low. The first reason is because technically speaking, at the time of recording this video, we are still currently in a higher low structure on the larger timeframes. So we technically don't confirm a larger downtrend until we actually break below the previous low, because in that case, obviously we'll be looking at lower lows, and considering we've already seen a lower high, that would officially put us in a larger downtrend. And something else to consider is even if we do find some support at these previous lows and bounce back up, that could potentially lead into a head and shoulders pattern, which is technically a bearish pattern as well. And so if we see that final confirmation of the break below that previous low that I just mentioned, then personally, I'll be moving some of my Ethereum into Bitcoin, as Ethereum potentially underperforms against Bitcoin, considering it would be in a downtrend at that stage. And looking at the daily time frame for Ethereum versus Bitcoin, right now this bullish divergence is really getting tested, because if Ethereum drops any lower against Bitcoin in the shorter term, then that would bring the daily RSI below this upper trending line of support, which would essentially invalidate this bullish divergence. So this is also something that I am keeping in mind moving forward. And heading over to the Bitcoin dominance chart on the 3-day time frame, we are still seeing a continued breakout to the upside, which is not good for altcoins. I repeat, it's the ones that are heavy in altcoins right now that are most likely going to perform the worst, because obviously as the Bitcoin dominance climbs, that means Bitcoin is gaining market share over the total crypto market, which means altcoins are losing market share against Bitcoin. And so essentially, while the Bitcoin dominance is breaking out to the upside here, the altcoin market is underperforming Bitcoin relatively speaking. Now, obviously, considering the fact that there's tens of thousands of altcoins out there, this is not going to be the same for every single altcoin in the entire market. This is just talking about the overall altcoin market on average. And just giving you a really really quick update on the US stock market today. This right here is the Nasdaq 100 index on the 4-hour time frame. And yes, that bullish divergence that I've been speaking about over the past few days is technically still active. And you can see right here at the time of recording this video, we are still playing this out because it simply means we're due to see reduced bearish momentum, which is exactly what we've seen since the bullish divergence that I mentioned a few days ago. And if you want to know how to keep making profits in crypto, even when prices are going down, check out one of these uploads popping up right here on your screen, because both of these videos reveal how you can keep making money in crypto no matter what prices are doing. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.